Let's take a look at the headlines. Microsoft, Alphabet, Amazon, and Meta just collectively committed somewhere between $660 and $700 billion of AI infrastructure capex for 2026, with all four CEOs telling Q1 calls they are still supply constrained. Microsoft alone has an $80 billion Azure backlog it can't fill because it can't get enough power. Gary Marcus is calling the whole spending posture out of control. Michael, where is the actual stress fracture here in this build out? Is it the chips, the grid, or the unit economics?
Let me take it a different direction. Let's start with the financials because they're actually all doing quite well on the revenue. It looks like all of them, their revenue is up. Now, is that because of AI? That's the question, right? Because the statement is we're supply constrained, the demand is there. But if you think about CapEx, CapEx is future looking, right? And usually it's going to take you time. I think one of them is spending it mostly on data centers. It will take you time to receive the return on that CapEx. So you can't look at today's earnings or this quarter's earnings and then say that CapEx is returning. It's often very difficult, actually, to show a return, direct return from CapEx you deployed in the past to the revenue you have today. So is the correlation there? Possibly, but it depends on you putting the money in the right CapEx, the right capital projects, which then would lead to the revenue generation. So you need to have that in your head. Anytime somebody's talking about CapEx and being demand constrained, you need to be able to put those two things together. The CapEx we're talking about and Gary Marcus is talking about is for future revenue. That's what the skepticism is. And of course, if you're a CEO today and you're on an earnings call, you're going to be saying, our past CapEx has turned into this revenue that you're seeing, and we're getting great demand for our AI products. That's a leap of faith assumption, though, that demand is for all the compute that you're going to need. And that's really the only thing in the way. So that's the context you need to think of. You need to look at the P&L. You need to think about does CapEx return through future revenue? Because it's not talking about today's revenue, right? Like that can't possibly be related to the future outlays. His skepticism, Gary Marcus and many others, is there really enough to go around? Will this be a price war if everybody's going into compute, right? They're putting out so much capital to drive this transformation, the next transformation, digital transformation, now AI transformation. Will there be a return? He's skeptical. Now, he's probably skeptical for other reasons. He fundamentally doubts this technology being the right one for the AI revolution transformation, hallucinates too much. You got to verify the output. It's basically just an elite pattern matcher. So his skepticism runs deeper than the financials. Even if you weren't skeptical, right, that AI is revolutionary, you still got to figure out which company is going to make those capital investments and will they make them in the right things. You would have two reasons for skepticism, the technological one and then the business side. So I know that's a long answer, but it's never so simple as it looks on an earnings call.
I was kind of looking at the difference between this bubble going on today and the dot-com bubble of the early 2000s. And the differences here are that some of the companies in the early 2000s, like Yahoo, was 600% overpriced compared to its revenue. And today we're looking at somewhere in the 16%, 20% of overpriced. So we're talking about a little bit different magnitude, even though it may feel like we're in a huge bubble right now. We're still smaller. When you look at the actual data, the numbers are smaller percentage-wise than they were in the dot-com bubble.
Yeah.
So,
Well, we don't know. So I think what makes it difficult to analyze is the companies we're just talking about, they have cash. Like they're spilling cash in all directions. They have for a long time. So they could potentially afford these capital outlays. Now, Gary Marcus's comment was sharp. Hey, these companies are spending so much capital. They're spending more capital per month than the Manhattan Project did in total, which means there's a lot of risk, right? Again, are they putting it on the right things? Where I think the AI hype is most relevant is not these companies which have well-established business models. You can question their capital outlays. It's more on the what about OpenAI? What about Anthropic? What about the others? Because they are not earning so much cash yet. They're growing. They're starting to accumulate revenue, but nowhere on the order of magnitude that those companies are earning it. And there you have to say, okay, can they justify the capital? The others can afford it for now, as long as the shareholders hold. But could they? Anthropic, OpenAI, and I know they'll come back up in the next segments.
Yeah. All right. Let's move on here to the next segment. Speaking of, two models released in the last 2 weeks, and they both tell the same story from opposite ends. Moonshot's open-weight Kimi K2.6 ties GPT 5.5 on the SWE Bench Pro at 80% lower token cost. And XAI quietly shipped Grok 4.3 mid-trial as a budget reasoning model that scores 53 on the intelligence index versus Opus 4.7, which is at 57, and GPT 5.5 at 60. There's a lot of numbers in there. Michael, are the frontier and the bulk market actually decoupling, or is this just the same compression curve that ate every other software category?
Well, looking at this, first of all, I think like if you look at this artificial analysis, what is it called? The Artificial Analysis Intelligence Index. That's a hell of a mouthful. But it evaluates things across three evaluators, or 10, sorry, 10 evaluators, and then they rate them.
Mm-hmm.
The Kimi one, I think that the headline there was they were saying we beat OpenAI GPT 5.5, I
Yeah,
believe,
tied 5.5.
on
Yeah.
coding, right?
Yep.
Now that gives you a hint on something. That they pointed that out means it's probably not beating it on the other nine, right? But it's beating it on this particular one, and that could give you a hint about the strategy of the company. If there is a strategy, you have to question that always. But they may be hyper focusing on exactly coding.
Yeah.
Where Grok, it has a score of a 53. What I found interesting was it's like having its price, right, on the API cost per million tokens, which is a big thing, right? It's starting to position itself, if you look there, as maybe a cheap alternative to some of the frontier models, trying to maybe draw some people in, just like the open source models are. If you're price sensitive, yeah, maybe we're not as good as the frontier models, but we're pretty damn close, and good enough can win in most contexts. And the other thing I noticed there was moving towards native input, native video input, and then having the ability to output like Office, Excel, or PowerPoint, et cetera, help you with presentations. So you can kind of see in the hype and what they're saying about themselves where they may be focusing. But you're right, in all of that, there's a tension in there and it's price. So everybody's trying to figure out what to focus on, where to segment, and then what is the right price to draw people in. And so that's the part I found the most interesting when looking through those. It's difficult to come to a broader conclusion, but I think there are so many damn models out there. They're going to have to nail the customer segmentation and the strategy because otherwise they're just all competing for the same pool. And that's a price war waiting to happen.
As we get more and more down the road with LLMs, I think that at the end of the day, it's going to come down to efficiency and who can have the most compute with the least amount of tokens, the lowest cost compute, that kind of thing. And looking at the Kimi in particular being so efficient at what it does, it kind of makes me wonder if these hyper-focused AIs will be more efficient. So I was also reading another article today about a search-specific agentic AI that is meant to do the search functionality instead of an LLM. You have this search-specific model go do the search for you, and then it relays that search data back to the LLM, who then reasons on it, right? So the search is good at search, the reasoning is good at reasoning, and they're probably more efficient as well. So kind of wonder if that paints a picture of maybe what the future is going to look like here, and that's going to be a lot of specific models for specific tasks. Could be.
Yeah, in a previous episode we talked about an analogy or a comparison is that remember Yahoo, right? Yahoo did literally everything on his webpage from fantasy sports to mail to chat, et cetera, et cetera, et cetera. And then Google came along and just hyper focused on search.
Yeah.
So you could kind of say this is a good comparison For the broad LLMs, which are literally trying to do everything, what if other ones come along and they just focus on coding, or they focus on image creation? Or Grok, what could be interesting with Grok is that you have all of that X data. What could you do with that?
Yeah.
You only have that, right? Others can access it through the API, but that can be shut off at any time, as you know. So I think that is a very interesting way to look at this LLM war, if you want to say it that way, is how will they segment again? What will their strategy be? And the most important question in strategy is always, what will you not do? When I look at OpenAI and Anthropic, it's not clear what they won't do yet. They seem to be all over the place. So, as a strategist, you would want to get an answer to that. Kimi is kind of implying it, but that may be because they're not good enough yet to do the rest,
Yeah.
right? So,
Could be. Well, speaking of Anthropic, they moved Cloud Security to public beta on April 30th with CrowdStrike, Microsoft Security, Palo Alto Networks, SentinelOne, Trend AI, and Wiz, all embedding Opus 4.7 directly into their platforms, and Accenture, BCG, Deloitte, Infosys, and PwC handling the deployment. This companion Mythos model has reportedly already found 271 vulnerabilities in Firefox alone. Does this kill the AI native cybersecurity startup category before it gets seriously funded, or is there still a layer between the model and the SOC somewhere where someone wins?
this one's interesting. It's something I've been thinking about a lot is you might get the impression that Claude, Anthropic trying to do too many things at the same time. Code, security, and the skills that you're seeing that they're launching into, like PowerPoint skill, financial skills, financial modeling, Excel modeling, whatever, right? So they're doing a lot of things, and you look at it and you think, oh my God, are they doing too much? But it turns out they're doing that across the same base, right? So you could make an argument code, you're generating code, it's adjacent to it to check the code, right? Check the security in the code. And then the output of the code, you could say, well, the skills layer on top. Now, though, what's the downside to that? Are those just thin wrappers that an AI native startup that focuses purely on cybersecurity, which we were just talking about, could they still win?
Hmm.
I don't know. But it does mean this private model, Anthropic, is expensive. They're burning a lot of capital. They're getting more expensive. They're raising their prices. I don't know if you saw that this week or the last 2 weeks. A lot of noise around like doubling the price of things. So if they can easily be commoditized themselves, you might see a proliferation of wrappers out there, whether they be cybersecurity or Excel modeling or financial modeling, whatever. They're going to have to be careful that whatever they're building, if they're building a little bit vertically off of that horizontal token platform, should they be doing that or just focus on the tokens and let others build that and then make those people who are building on top of them just pay for the tokens? I think it's a great strategic question. They're going to have to answer.
I know recently in recent episodes we've discussed Anthropic's deals with Google specifically and how that could, lead to them having more availability with Google's TPUs and more compute coming from that direction. So hopefully, they've gotten some of that compute now. They leaked Mythos a couple weeks ago, and now we're seeing this security model come up. I think it's all balled into one really good sales pitch for this security software that people are really clamoring for now. Companies are. On top of all of that, if we were in a public company round, like right now, we're still in the startup phase, essentially, for these companies, even though they're huge, they're still in the startup phase and they have a lot of VC funding behind them, which creates this false supply. Like there's not, in a real market, there wouldn't be this lack of supply because you would just raise the price and you would price it to where the supply equals demand at that price, right? And that we're not getting it right now because we're still in this startup phase. Is that kind of your take on that? Or how do you think that's going to play out when they actually IPO and become a publicly traded company?
I don't know. I think one of the underlying tensions that you're seeing, why are they partnering? I think we talked about that. There isn't
Yeah.
enough compute for them. That's one of the reasons. But the other thing that we brought up, and we should bring it up again, is are they finding out that going vertical into enterprise is a very difficult thing to do? That's also expensive, besides the compute. To get enough salespeople out there to build enough projects, that's not the most scalable business, right? So you have this tension where you're selling tokens, but at the same time you want to build projects. And maybe these partnerships with standing behind them is that Google already has the channels, Microsoft has the channels. You see a partnership with Microsoft and OpenAI. Now you're seeing Amazon doing the same thing. And maybe these foundation labs are basically saying we cannot build these channels by ourselves without help. The question would be on the other side, well, why would Amazon help them? Why would Microsoft help them? Why would Google help them? And that could have something to do with, well, in the future, maybe the enterprises, you offer them, yeah, we work with Claude, we work with Gemini, we work with GPT. So you have a full range of options when you go out to your enterprise customers. Being only one of them runs into problems. I can tell you that. We built an application on top of Anthropic, and then you go into an enterprise and they say, well, look, we're on Copilot and GPT. So your game is over already at the door. So it's a strategic question to answer. Is supply artificially constrained? Will it get better? I don't know. So we'll have to see.
Yeah. So if you haven't noticed tonight, in my lead-ins to these subjects have been very detail heavy as far as numbers, and I just read a dozen company names. And that's because Claude wrote all my lead-ins tonight. I ran out of time, unfortunately. But that kind of leads me into the next topic, which is AI slop. And Organization Science published an editorial this week analyzing nearly 7,000 submissions and 10,000 reviews from 2021 to 2026. Submission volume jumped 42% after ChatGPT.
I wonder why, right? I wonder why.
The majority of 2026 manuscripts now show AI fingerprints, and reading ease scores are dropping. Just as I mentioned, the authors call the new equilibrium more, not better. Mike, if peer-reviewed research is the substrate everyone updates priors on, what happens to the update process when the substrate is contaminated?
Let's look at the academic landscape in general first. What is the phrase that you hear about becoming an academic, getting tenure the most? Publish or perish. This is the incentive underlying all of this, right? So probably the volume that you're seeing has been unleashed because of that incentive. I'm just going to throw as many cannonballs at that wall as I can so that I get published. And if I place enough bets, and GPT's helping me do that, so the hell what, right? One of them gets through. I wrote 10 more papers than I would have otherwise. I wrote 100 more. Now, the quality of the papers. Have you ever read peer-reviewed academic literature? It's already almost unreadable, but for very different reasons.
Yeah.
It's so jargon heavy. It's written so densely. It's so written around the statistics, the statistical analyses that you got to do, the experiment setup. That is why only 4 or 5 people ever read this. It was already difficult to read. Now, the problem you get with AI is a different kind of jargon. It's like jargon from Reddit threads or from X, right? Where it sounds like you're writing an X post, which is super abstract, jargon-based with no scientific literature behind it. So the jargon you had in the academic papers was like actually academic jargon.
Mm-hmm.
And so, yeah, that's on the production side. So the incentive is to produce as much as possible because the more times that you're cited, it's not only better for your university. I think there's a University of Texas, Dallas, who keeps a ranking, and that increases the prestige of the institution. But the whole academic game is getting cited over and over and over by others. And if you increase your volume, you get more citations, even if the quality of every paper you write is lower, right? Yeah. So that's the incentive. Now, on the other side, the publishers, they're having to read more volume. And it is very difficult, as you noted, to even prepare for a show with all the news that you got out there to read everything thoroughly. Now imagine you've got a 42% increase in papers being pumped out by ChatGPT and the others now, and you have to decide as a publisher what to produce, and you need reviewers, academic reviewers, to read all that. Well, that might be the better place to deploy AI, right? With proper scaffolding, with a proper system prompt that can determine one, was this AI written? Two, is it good? And just to get you through the first bars, right? The first gates before you send it off to reviewers. So you end up in this ironic situation where AI is writing the research and also reviewing it.
Yeah.
Right? So the question is, what's left for the academics and the reviewers to do? And how can they stop this? Or should they stop it? I don't know. Because, like in medicine, often, or in pharmaceuticals, you're just like crashing lots of molecules together so you might produce something that's effective. And maybe you could make an analogy. I know a lot of people will reject this, but if you're just throwing a lot of slop right out there, maybe there's some good slop in there. I don't know, right? Maybe some, you know, what do you call it? Like a trend breaking paper comes out of the slop. I don't know. But it could also mean, here's the other game. There's always a place where you can differentiate. And this was pointed out in the article. I thought this was really good that AI is actually making some writers better because they're using it. They're not outsourcing their writing or their thinking. They're using it like this. So I write a few paragraphs, I ask AI to review it and challenge it, and then I go back to writing.
Mhm.
And those people are upping their game. What these articles were complaining about were the ones who aren't doing that. They're just outsourcing it completely. So I don't know where it goes, but academia has a hell of a discussion on its hands in general about what to do with AI in the classroom to this publish or perish environment. That was a
Yeah.
long answer, but I think you need to understand the incentives and the background of academia, what's going on there.
There's a lot of parallels between this and I don't know if you've looked for a job lately, but resumes are written by AI now, and guess who reviews it? AI.
AI.
AI. So,
And they like
it's,
each other. Have you seen that? I just saw an article that AI prefers resumes written by AI.
oh, fantastic. I should be in good shape then.
Exactly. Right?
And the
And
other,
hey, even more interesting is the AI can detect. Let's say the AI reviewing is Claude. It can detect whether the AI that's writing the resume is Claude, and it prefers Claude over the other models, and it prefers all the models over human writers. Right? So,
interesting.
hey,
Yeah, interesting. The other thing I wrote down there was the Taylor Swift law of volume is works out for a lot of people. Put out a lot of stuff in some
it
sense.
works on X. That's the whole point of a bot, isn't it?
Yeah, pretty much.
Yeah.
All right. Beijing, switching a little bit of gear here. Beijing just killed Meta's acquisition of Manus, the Singapore-based Chinese AI agent startup, by refusing to clear it through merger review. Bloomberg's read is that this calls Singapore's whole role as a Chinese AI hub into question and signals that capability flight is now an explicit national concern. Mike, is this a one-off, or is the Chinese government now drawing a permanent ring around its AI research diaspora? Thanks, Claude. I don't know. Diaspora? Thanks, Claude.
You know what a diaspora is? I can explain it.
I'll look it up while you talk about the question.
Okay. So I used to live in Singapore, and Singapore actually has a very fascinating history. And I'll get to the point why this matters for what we're talking about. Singapore is an entrepot, right? So it has the advantage of Chinese traffic, Asian traffic, shipping, trade has to go through there. But it was also a British colony. So it has this unique place in today's world between two polar opposites, right? Well, let's not call them opposites. There's the China pole and the US pole. Singapore has Anglo-Saxon common law. So it's this, but a lot of its population comes from China natively in the past. So it has this very unique position to understand both worlds. And it was trying to position itself, and I think it's always tried to do that, to position itself as a neutral party that understands both worlds, where you could then develop AI businesses, trade businesses, banking businesses, etc. Super successful model for a very long time. And this would call into question, we call into question Singapore's current model. So what happened here was Manus was a Beijing native startup, right? So China startup, which comes with all of the surrounding data sovereignty and the issues with if you invested in a Chinese startup, how do you get it out of there? How do you exit it? Can the exit be to a rival power such as the United States? And the hope was that if you put it in Singapore and it grew up there, right? Meta invested in it and then tried to acquire it. So that would have been the exit being based in Singapore. It would be allowed to exit to Meta. China said, hold your horses. That's not going to happen. Well, now, why would China do that? Well, two different models of how AI should be developed in the world right now. There's a state-sponsored model. A lot of the open source models are in that model, but that data remains sovereign to China. China sees it as a geopolitical topic, right? That this is a race and it's a national level race. Then there's the US model. There's some of that, right? There's some discussion around should the US be more like China in that front. But this was between Meta and a national government. So the US is more of a private led model still, and that clashed in Singapore. Now, I'm not going to go into what's a better model, but here's one of the dilemmas for China. AI is a dilemma for China. It poses a great opportunity for them. You've seen it in their factories, how far advanced they are in automation, et cetera. And the neural network they've put around like Shenzhen and Shanghai is anybody who goes there is going to be amazed. So that opportunity is there. On the information side, for them, AI is a nightmare, right? How do you keep data sovereignty with open models that can be run locally, right? How do you keep data sovereignty if your startups need capital and you go to Singapore to get that capital and Meta's already basically taken all that information from them in the due diligence that they didn't stop it, but that's the dilemma they have. Like, will our AI startups be able to compete with the US startups if they don't have access to private capital?
Yeah.
Right? That's a conflict for them. Our conflict is a little bit different. We've talked about it. The US question isn't really around the privacy, data sovereignty, etc. It's more about how do you power this thing? So China has solved that. I wouldn't say completely because they're going to need a lot of compute too, but they've got state-directed energy production, right? And then the US is lagging behind on the energy production, but maybe it's farther ahead in allowing AI startups to do what they need, get private capital. They're not so worried about, not as worried about that data escaping. Although they have accused the Chinese of taking the models, the background, the IP, etc. So it's a very complex issue. Singapore sitting in a very unique position. I get why they had that hypothesis that we sit just because of our very unique history at this intersection between China and the Anglo-Saxon sort of world, the United States and the rest of the world. We can be a neutral party that actually gets along with both sides pretty well. But it seems like that was a bridge too far for the government. We don't know what's behind that. I don't want to jump to too many conclusions. It could have been a bureaucrat. We don't know, right? That came down with this order. But very interesting because you do wonder, and this will come up later, what's the role of other places in AI? Is the AI race Steve Blank, I listened to him in London at Imperial College. He kept bashing Europe, like, Europe, AI is out of the box. You're falling behind. China and the US, they're not waiting for you. They're not waiting while you write nice laws. They're not waiting. Two different models, but they're both moving ahead fast. But yeah, interesting question.
Interesting. I've been a little bit tired tonight, and I think I know why, and that's got something to do with Trader Joe's. Customers say Trader Joe's has misled them on the caffeine content of its house coffees, with independent testing showing some products at 30 to 50% of the labeled caffeine amount. The retailer is one of the most trusted private label operators in American grocery, and the case is now drawing class action attention. Michael, does this puncture the Trader Joe's halo, or does its customer base forgive things its competitors couldn't survive?
This one points out the incredible power of a brand. Trader Joe's probably has one of the most powerful brands out there among a particular crowd. Like they're like local, right? They like organic, or at least they like the appearance of that, right? And Trader Joe's was always giving that appearance. And I know many friends who went there. One thing about their shoppers, they're like religiously devoted to Trader Joe's.
Yeah.
One of the things I like there is their cheese, because being in Europe, you had access to a broader range of cheeses, Camembert, Brie, etc. So my wife goes there. I really like their cheese, but it does start to raise the question: can that brand survive one of these? Probably, if you had to guess. Like that would be my prior. That these people are so devoted, they'll find some explanation for why that happened.
Yeah.
I would also be angry if I found out my caffeine didn't have as much caffeine as I wanted, particularly in the morning. But it calls into question, what about all the other things they're labeling where they have trust? Are there other examples where maybe the label is not as honest as it could be? You're from Oklahoma, I'm from Oklahoma. Out around where I lived and my parents lived, you know where that is.
Mm-hmm.
It's basically cows, oil derricks, and just a lot of open land, right?
Yep.
Talk to the ranchers. But you know what they laugh at? Grass-fed beef. They look at you like it's all grass-fed. That's all we got. We got
Right.
grass everywhere, right?
Yeah.
So there's a lot of that. Probably there are a lot of shenanigans in that space, like what qualifies as free range, what qualifies as grass-fed, what qualifies even as organic. I don't even know anymore. I mean, my joke is always like, well, pond water is organic. Do you go drink that? So I just don't know. The definitions are tricky on a lot of this stuff. Who's really looking at these? Or are they just taking it on faith? That's my longer point. Do you just take these definitions on faith? Do you check them? Well, somebody checked the caffeine level. So
I'd like to know how, maybe this is something we can look into later, but I'd like to know how caffeine is measured in these things. If it was, if the caffeine content is added, if caffeine's added to the coffee after, or is it all just naturally from the beans? Because if it's all just naturally from the beans, then, maybe they just got a batch of beans where the caffeine content was off. I don't know. Maybe it's just an odd thing to me, because the the unhealthy product in coffee is caffeine, you would argue. And that's what we're mad there's not enough of the unhealthy thing in my stuff. It's just it's a weird position to take. I think it's a funny story. I don't care that there's less caffeine than that's on the label, but then I do.
Caffeine, I tell myself that caffeine is healthy. So.
Okay, well, I've broken the habit, so
yeah.
Sorry. Hey, you've just watched a clip from Show Your Priors podcast. Check out our main channel for full episodes. We have a new one every Tuesday. If you liked what you saw, give us a like and subscribe. It's free for you and helps us out a ton. Did we miss something during our discussions? Let us know in the comments below. Thanks, and we'll see you on the next one.